What's up, everyone? Welcome to AI Office Hours. This is a live working session with me and my LLM, my large language model, who I've named Gamma Delta Theta. And we're going to be working together to do a little bit of a live coding project that I think will be pretty fun and very interesting, which will be to try to get our own sentiment score and analysis of the live order flow from the options market as trades come through the pipe. And so I've done some prep here to try to smooth things along because we don't have a lot of time today in terms of there's only about 20 minutes of trading left. So we'll make this a quick episode and see how far we get. But the goal is to connect to the Polygon API, which is what I'm using to get the trades data, to categorize all of the trades by their sentiment, whether they are puts or calls. I'm not sure if we have like the buy side or the sell side, so I don't think we actually get that data in terms of like, are they selling a call that would be bullish? Are they selling a call or that would be bearish? Are they selling a put that would be bullish? Buying a call, the long call delta or long put delta will help us determine sentiment. And so, yeah, let's just dive in and see how far we get. So, like I said, I did some prep here, so I know what I want, which is an extension of a lot of code I've already written, a lot of that on this show. So we're just going to export a default class here called TradeFlow. And that is going to extend our Polygon API, which itself extends some other classes. And it has some methods we can tap into in the constructor. Let's just go ahead and super this. And I believe it's connect. And so what this code is doing, connect, is giving us some easy helpers to automatically bind to on open, on disconnect, on error, and on message. And all those are, since we've extended from the Polygon class, we have those same methods here. So on open, this is going to be where we subscribe, we auth and subscribe. And then on message, this is where we'll actually handle the raw data from Polygon. So having worked with this API a lot, I know that I need to stringify this. And it's going to be, let's just call this event. We'll say raw data.toString. And then we're going to parse this. And I believe we want to say this as Polygon event or Polygon socket data. Yeah, that's it. This is a type I already wrote that gives me, TypeScript is so powerful for being able to get autocomplete. It's like so helpful. And so then we'll say we want to get the trades. That's going to be the event, which is an array. Let's call this events. And then this is going to be event.ev equals trade. So if it's not a trade, let's just return. And then we can filter out any nulls from that return with this statement, filter Boolean, little handy shortcut if you don't know. So yeah, that should be our on message helper. Since we got our WebSocket, this .WebSocket, again, I get a lot of this code for free because I'm extending for Polygon. We want to say .on open. Oh wait, no, we're already in open. So we want to say, we actually want to make our subscriptions here. So this is where we want to send or message dot message. Dot ws dot send. Yeah. And I need to find an auth example. Actually, where can I get an auth? Let's say, can you give us an example of how to auth with the Polygon WebSocket in Node? Let's see what it gives us. This data comes in so fast and we only have a few minutes, so I want to go quick. I know I'm like moving fast here, but it's because I want to show you guys how like interesting this data can be. Auth message, yeah, action auth params API key. Yeah, I think that's it. So we'll say auth equals, I think I actually do have a Polygon message, not Polygon. Maybe I don't have an auth statement for that yet. So what do we want? Actions, param. Is it like auth? Action, index. Oh, great. I got to change that API key again. That's always fun. But yeah, we could just copy and paste this. So, except like this, because I like having the actual object. Action is going to be auth. And our parameter is just, okay, so GDT was right. Should have trusted him. Then I wouldn't have had to reveal my API key live on the air. But that's okay. So we'll just say tokens dot Polygon API. I think that should work. So there's our auth statement. And so we can say console.log connected. And then for here, let's just say got a message. And then we'll see what the event is. Let's just call this messages. Makes a little more sense. Trades equals message dot type is trade. If it's not type, then we want to return. Otherwise, console.log the message. So this should already give us, once we subscribe, like the reason I want to do it this way is just like so I get the autocomplete. So action auth subscribe, action subscribe. Let's see. Subscribe. No, that's not it. Where would I get an example of that? Let's ask GDT again. Oh wait, he already gave it to us. T Apple subscribe. Okay, so let's just try this. Subscribe params, and we'll call this T dot star. So we want to get all the trades data, live as it's coming in. And that should work. So let's see if we get anything out of TradeFlow, out of our new class. Well, we might want to do something like this. TradeFlow. So boom, we got this is what I wanted to show you. Okay, so that's cool that it worked. I mean, I've done this a few times, so I'm not like, it's not like my first time doing it. Okay, very cool. So we got the symbol, we have the exchange, the price, the quantity, the trade conditions, when it happened, and I believe like some kind of order in case there's multiple in the array. Cool. So like, look at how many trades are coming in. Like, let's just visualize this again. This is like so fun in the mornings to turn this on. It's like, it's pretty cool. So the first thing we want to do is start categorizing these by company. And so let's start by making our own kind of trade class or interface. We'll call this trade, and a trade is going to have a ticker, and I have a type for that, which is like pretty cool because it gives me like this like autocomplete. I have like a method to download all the option trades from Polygon. The option contracts, which is how I made that autocomplete. It's cool. So like if I go like Polygon get contract by ticker, then, oh no, you're not going to do it for me. Oh, why doesn't it do it for me? Ticker, oh, because it's not properly typed. Let's fix that. Let's see, ticker, boom. So I can be like, oh, Tesla. You got to get the autocomplete right. Oh, Tesla 26. Like you could just like go and browse all of the option contracts that way. Kind of like the power of TypeScript. So anyway, every trade is going to have a ticker, a price, a quantity, a timestamp, and this is actually not going to be, let's call this recorded, because this is going to be used later. I want to create 4 or maybe 5 vertical time columns: 1 minute, 5 minute, 15 minute, 30-minute, hour, and and then have all of the companies visualized that way. And then let's say details. Let's go interface, ticker details. Let's just call this like contract, trade contract. And this is going to be just like a breakdown of the ticker. So that's going to have our, what symbol, we'll call this a ticker. Expiration, this will be a year, month, date. Our type will be a contract type, put or call. And finally our strike price, which will be a number. And then let's include this just in contract. And up here, something like that. I like that. Okay, so we want to build out this trade. First, because I know we're going to run out of time, I want to see if we can get a way to record this. Can you write me a quick helper that takes, that dumps in all messages from a WebSocket to a local text file so we can replay it later. And then I think we can use something like process.exit to say tradeflow.websocket.close and exit code. There's a way to on message. Let's see. FS append file. Looks pretty good. Well, let me come back to that in a second because that's going to take a second. I'm gonna save. I'm just going to get a record of this in another window. So 1 second. CD. And then we want to say npm run trade flow. Boom. Okay, so we have this. We basically just want to fill out this trade now. So trade, we'll type it as trade, and we'll say the contract is going to have the symbol, the expiration, the type, and the strike. And that will be in the ticker, will be up here. The price, and the quantity. So we should have all this data already. Ticker should be message dot, what is it? SYM. Polygon socket. Actually, I think we want to say message here should be Polygon trade data. Trade raw. I think that's it. Okay, so message dot sim. So, oh, this is actually, I think, of type array, right? No? Is it? What is message dot EV? Okay. So we're saying message.eb, and then we want to say this is the symbol. So that is our ticker. The price is going to be P. The quantity is going to be S. And that's pretty good. And then the contract, the actual details of this, we could say I have a helper get ticker. No, get options ticker, get contract, get ticker, what is it? Extract ticker details from ticker. And this should give us the symbol as symbol. Let's just call this symbol. There we go. No? Is that not how you do it? Like that? I can't remember. Let's just keep it easy and do it quick. So expiry, strike, and type. So const expiration. Actually, we could just come down here and say symbol, stock symbol, expiration, expiry, strike, and as, we'll just say that. Strike is a string, parse float. Okay, I think we're pretty close. What are we missing from our contract? Symbol, expiration, type, and what do we miss? Oh, we're just have a bug. And then the trade is never read. Okay, so let's say this dot trades. We'll say trades. This dot trades equals that. We cannot find trade. And then we'll just push these into that array. Dot push trade. And there's still a type error is missing, but required. Oh, I think type as contract type. It's fine. No, is that not it? What are we missing? Contract is going to have a symbol, expiration, type, strike, a ticker, a price, a quantity. Oh, recorded right now. Cool. So let's see. Oh, market just closed. Is it going to give us data still? We don't need this right now. Yes, okay. We still, because the data comes in, it starts to trickle off. So now we should be getting our trades array, which is freaking cool. So let's actually look at the trade and not the message. Console.log trade and see if we got that information coming in as we have formatted it. Oh yeah, there it is. Nan, what's a nan? So it looks like it's not always getting the strike, or it's never getting the strike. Parse float. Let's just say as this as any for now, just to see what it is. It's probably a string. Put call. Oh, it's got $1. Cool. Okay, there we go. So this is all the trade data coming in. Now this is kind of weird. Why would it have that $sign? Extract ticker details. Strike. Oh, I add that? That's funny. Why would I add that? That's kind of dumb. Oh, I don't want to change that right now. So that is the strike though. So this is pretty cool. Okay, so now we can start saying, we can start categorizing these by puts and calls, and that will help us start our sentiment score. So really trades, I don't think we actually want that. I think what we want something more like this. Trades is going to be a K and ticker, or is that how we do it? No, it's going to be like K in, I think this is right. K and ticker should be okay, so now we got to think what we actually want this to be. What do you complain about? A map type may not declare properties or methods. Type trades is can't use an interface here. Equals. So what I think we want per ticker, and that is going to be not actually the ticker. What we want is symbol, stock symbol. So per company, we want, let's just track the tickers. And we'll get like a unique list of all the tickers. Let's get trade count, trades, number, like, let's say, how do we say this? Premium, we'll say total, we'll say bull, we'll say bear. And then I think that should be a pretty good indicator. And then we can say puts and calls. And that will help us get a put to call ratio a little bit later. So from here, we're saying for each company, we're just going to track all the tickers traded, the number of trades, which is kind of pointless since it's the sum of puts and calls, and then what the premium was. I kind of want to just say like total premium. Let's keep it nested, so it's all in a folder. Okay, so now instead of just pushing to trades, we're going to call this trades. This dot trades equals an empty object, and this dot trades. We'll say if the symbol, if we have not yet created it for this company, then let us create it with these same defaults of tickers. That'll be an empty object. Puts, that'll be 0. Calls, 0. Premium, right? Oh yeah. Total, 0. Bull, 0. Let's just use the same convention of puts and calls. Puts. Yeah, and that way our convention is the same. Yeah, that's good. Okay, so we have the live socket connection. We're still getting data. That's pretty cool. Okay, so it's 5 minutes after market close, and we're still getting pretty good data flow here. Not a lot, but these are still somehow coming in. I'm not sure how that works if the market is closed. I guess there's aftermarket options trading. Probably just like way less volume. So it'll be fun to continue this in a couple of days and see if I can get it visualized in a way that's cool. But for now, we just need to track it. So we're going to say If we don't have the current company recorded yet into our trades object, then we'll create this kind of skeleton, which we can use now to populate. So we'll say this.trades on the stock symbol dot tickers. We'll say if this dot includes ticker, if it doesn't include, then push it. So that'll give us our unique tickers traded. Like this dot puts equals our trade dot contract dot type equals, actually here's what we want to say. We want to say if the contract type equals put, look at that autocomplete, so nice to have. Then our puts plus equals our trade quantity, right? Because this is just like the actual quantity of puts being traded. Same with calls. Trade quantity. But really, I think what we want to do is like more like this, because we want to do other operations. Like what else? I think we want to say premium dot puts plus equals the quantity times the price. Nice. And then we always want to increment our total regardless. And then let's just call this order total or trade total. Cool. So I think that's pretty good. Now what we can do is like just like display this information as it changes. So let's just set an interval to recur every let's say milliseconds dot, like every second or so. And then all we're going to do is say console.log trade flow. Right? Yeah. Dot trades. I think that's what we need. So now every second we should be getting an update. Boom. Boom. It's working. Did that work on the first try? I mean, I know this code quite well. So that's pretty freaking cool. More puts coming in. Total, that doesn't look right. Premium calls, that's why. Puts. That is pretty cool. Let me just reduce the noise by, oh wait, did I already take it out? Oh, I guess I did. So I am displaying this whole object every single time. We got calls into the VIX, puts. So people think, I can't remember if XY is up or down. Let's see. SSGDT is UV, what was it called again? What's this ticker do? About, I know it's the VIX, I just can't remember if it's like betting the VIX could go up or down. Typically offer 1 at 0.5x the short term. So I think this is saying that the VIX is going to go higher. No, because they're buying puts on it. Well, it depends on if that's like an inverse of the VIX or the actual VIX. I guess I could just ask, is it an inverse of the VIX? Or does it go up if the VIX goes up? I'm going to ask, well, I could read, but instead I'll have him think for me. All right, let's just double trust but verify. Gives 1.5 times. So basically this is betting that volatility will decline. Interesting. Look at all these SPY. So what's our premium? puts. Oh, so we have something else wrong with our logic. Puts, calls, that might be it. Oh wait, no, I had this right here. Calls, I just need this to be there. Gold, people buying gold. So IWM puts, calls, 0. Well, I gotta see, oh, nice. All right, I think we're looking pretty good now. So we got 10 grand coming in on puts, but what is SPXW? I can't remember. SPXW. S&P 500 weekly. Huh. I don't actually know what that is. Is that an ETF? SPXW. Interesting. So, okay, this is pretty cool data coming in, and it's still coming in live every second. Let's see the volume on the trade data, because that'll be cool. So let's say console.log trades, trade. And then we can comment that out for now. So I'm wondering how we can easily sort this by premium, or like, yeah, we still got some pretty good, like, look at the rapidity of that data. That's coming in, right? Boom, boom. Like, this is after hours. It's still coming in. What's so cool about this is I can verify from using this for a while now that you can actually see when something big is happening, because the trades, especially if you're looking at a specific ticker, will just be like bump, 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 but then it'll be like, brr, 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 and it'll just like be rolling in. And so like, you never really know unless you have this, if people are buying or selling, or at least I haven't been able to know, but now I will be able to know what the sentiment is. Cool. So we got the trades. So now, like, let's ask GDT. Hey, GDT. I want to use a new one because I've been having trouble with them today. Hey, GDT. I want to quickly see the sentiment for the entire options market. To do so, I'm recording all trades through a socket connection as they happen. And then grouping by stock, by underlying, which is like the equity under the trade, under the option. So like if you're buying a Tesla contract, it's Tesla. I'm then grouping by underlying and then underlying and type. So we separate puts and calls to get a sentiment score / put to call ratio. Here's the interface. Using this interface, like, how can I very quickly get the most premium activity, the most premium, most trades, and like, and bull / bear flow. Let's just see what he says. To calculate those effectively, you can loop through trades. No, I don't want to loop through it. Let's calculate the most premium, most trades, bull, bear for each stock. We gotta wait for him to type all the stuff I typed. So most premium, bull, bear. I mean, bull, bear flow. I guess we could just like do what he's doing here. Let's just see if it works. So we'll start here with analyze sentiment. Down right there. And because I gave him the type, it should just kind of work, right? So now let's see what that gives us. Most premium. Okay. I think it's working. But it's still showing us the trade data, which we don't want. I mean, if you ask me, like people like I've heard be like, AI, it's not real. It's a fad. Are you out of your fucking mind? Like this thing just typed real, strongly typed functional code that I copied and pasted into my IDE and it executed flawlessly on the first try. All I had to do was tell it what I want. If that isn't a freaking superpower, I don't know what is. And it's a superpower that anyone can have is the other crazy part. So SPXW is getting the most flow. Makes me want to double check what that is. SPXW. SPXW. Stock. Like, I know it's not a stock, but I know it's the S&P 500. Like, let's see. SPXW. No, so it's not a normal instrument. That's what I was thinking. I think it's like a volatility index. Okay, so bull flow. Wow. Bull flow. Maybe this is not actually working as expected. Let me look at the numbers here. Most premium, most traded. It'd be nice to have like live market data. Let's actually see what this is. Bull bear flow. So this is value. Okay, so let's have them make a couple of changes. What? Like why? Let's just do a new one. So using this interface, please write a function which returns the following. And let's think ourselves what we want this sentiment score to return by creating an interface for it. Trades like a sentiment. So the sentiment is going to say we want like most active, which will be a number, most premium number, because like those could be different, although they're probably the same. And it actually wouldn't be a number. It'd be a symbol, and that would be a stock symbol. And most active, let's say trade count number, total premium number, and then most premium. Let's just say this like most active, like, and then I almost want this to be, trying to think. So we want to know if a company is getting bull flow or bear flow. And so the number one way to see that is going to be like, what's the number one way? If we want bull flow and bear flow. I think we want this to be like more like this. And so the sentiment for each, let's just say we're always going to get the sentiment actually. So this trades, all it's doing is it's collecting the data. Then the sentiment is actually analyzing it. And then we can query it. So maybe a helpful thing would be to look at an example of how I do like to look at this stuff on another thing. Nope, wrong page. Anyway, whatever. So yeah, like we want, so for each company, we want their current put to call ratio. We want their call flow and their put flow. And we can just call this premium. And we want, like, let's just say premium. But then we can also say count, like calls. Let's just say call count for now. It's not the best phrasing, but it's fine. So we have our symbol, we have our put to call ratio, we have our boom, and then we'll have sentiment, which will be a number. And then we'll have sentiment label, which will be bull or bear. I think that's pretty good. And then like maybe we can just call this, instead of count, volume. Volume, that's a better word. Okay, so we have our call volume and our put volume and premium, our sentiment and our sentiment label. Okay, so then we'll feed this back into GDT and we'll say using, like, please write me a function that looks at the trades object as the trades are coming in and updates the sentiment for each company, which then I think means we kind of want the same type for sentiment. Like, let's call this companies. Well, anyway, we'll keep it that way for now because GDT might use it. But we can call this sentiments. Like company sentiment by symbol. And then we'll say sentiment. I think that's a pretty good structure. So this is going to give us an object that's like SPX dot, I mean, we don't even need this symbol here, but maybe we'll want it. We'll see if we want it. Depends on, it might be better to have that be a list, an array, rather than a map or an object. But I do think this is a pretty good start. So let's say, please write me a function that looks at the trades object as the trades are coming in. And let's use a little slang. And updates the sentiment for each company in this interface, which will be, yeah, let's just see what it says. I mean, the cool thing with AI, because it's iterative, is if you don't like the response, you just get a new AI and adjust your prompt. So like, it's really worth learning how to prompt well. It's really worth it. It's not a ticker, bro. Making shiz up. But he does do a lot of work for me. I mean, I would say that GDT has written about half my code, including something I'm very excited about, which I just cannot. I wish that I had a better way to implement this, but it's just, I don't like. Anyway, it's this hedging program I've been writing called Delta Hedge. And the idea is I'm looking at every contract and every stock in every portfolio I have. And a couple of times a minute, I'd like to do it a couple times a second, but for now, just a couple of times a minute, I am recalculating all of the indicators. So I'm getting the RSI, the MACD, the EMA, the SMA, I don't actually have the SMA, I'm using EMA. All of the Greeks, the deltas, this, that, and the other. And I want to create like a strong signal based off of everything, so that basically I want my system when I'm doing trading to have a lot of intelligence that stops me from doing dumb stuff. So if I should sell, it just sells for me. If I'm trying to buy and that's a bad idea, it's gonna warn me first and say, like, the RSI is overbought on every period. Like, everything says strong sell. Why are you buying? I want to have a loss prevention program that makes it so that I have to enter all trades manually that might create a loss. Lots of different stuff that I'm excited to just try, because I guess I have a lot of time on my hands and this is what I want to do with it, because it's fun and interesting. And to me, the whole power and privilege of coding is whatever you want to do, you could just do it, right? And so that's what we're doing here. I'll show you Delta Hedge. MP run. I mean, it's going to expose some positions, but I don't think it's going to expose anything that bad. And these change every day anyway, so what does it matter? So basically, it goes through, reads all my positions, and gets the, that shouldn't have fired twice. Got to look at that. 3 times. That's definitely wrong. I must have a call somewhere that I shouldn't. So yeah, like what's it doing is getting like this delta value, and you can see it created a hedge order to sell to open to cover this call gap. It actually, I believe, would be this call gap. No, that's not. So where would it be? I guess it would be this call gap. Well, no, because these will come in asynchronously. They won't come in order, so I don't really know what table that is associated with, but I could look at it by just figuring it out through this. So what it's doing is it's looking at the previous day's closing delta. So when the market closes, it goes and it records all of the deltas for all of the positions. Now, what's cool about this is it's not just doing that on options, it's doing it on stocks. And so I'm actually treating my stocks as virtual options, and it works remarkably well. Now, not really, otherwise I'd be a fucking billionaire, right? But I've just been trying this stuff for like literally a couple of days now, so it's very new. What works well about it is it just makes intuitive sense to me when I look at the contract that it represents. So here's my current logic for a virtual contract, which I'll probably adjust. The main like cool part of it that I think is like a good idea is I'm using the cost average of the shares to map to the strike price of the contract. So that's a pretty cool thing, because what that does is, like, let's say you have a deep in the money, let's say you have a stock position that is like got a 80% return, or like 150%, or even like maybe like a 30% return would be enough. When it maps that to a virtual contract, that's going to be deep in the money. And it's going to be like a contract that's like, if it was like a Tesla, for example, it'd be like a $10,000 contract or whatever that it would be mapping it to. And so what that means is you get to take advantage of all of the special properties of hedging by delta instead of price, including how reactive it is. I believe, I haven't verified this, I don't know how it would exactly, but just like from using it, and like I get emails when it fires off hedges, it seems to like fire off hedges right before the price tanks. And that would make a lot of sense to me, because now it doesn't do it every time, because, you know, it's not monitoring that quickly. It's only doing it a couple times a minute right now. I need to get that down to a couple times a second. But still, the options market drives the stock market, not the other way around. So in theory, it should be more reactive. But anyway, what's cool about that is the delta hedge program works like this. Like I said, at market close, it goes and it records all of the deltas of all the options, and that's easy enough. But what's like, I think like a certain level of coolness, or like what's unique to my system or whatever is that I'm actually more excited to abstract shares as options. So for every block of 100 shares, and I just go ahead and say you need 100 to treat it as a virtual contract, but you could just as easily scale it by a percentage, and you could say this represents, I have 85 shares, that's 85% of a contract. You could do that too. But for now, I'm looking at positions with over 100 shares. So for each block of 100 shares, rounded down, because this is a hedge program, and I might adjust all these thresholds as I learn, we're going to go and find a contract that matches that. And at first I was thinking we actually kind of want to find a contract that has like zero extrinsic value. So like a contract expiring this week, but it doesn't really make sense to do that. And it doesn't because, why doesn't it? Maybe it does. I might try that again. Like the thing is, if you have the opposite of a positive return, if you're down like 20% on your shares, well, now that contract is way out of the money. And so its delta value is going to be essentially zero if it's expiring this week and it's deep out of the money. But I still want to hedge those. And so currently I'm targeting a window of, I believe it's 30 to 60 days. And I'm trying to find a contract, actually, right, yeah, I do have kind of a broad window because not all contracts trade every week or even every month. There's variability in the expiry periods of contracts per stock. And so, yeah, like if I was to use, my original plan was just always use this week's expiring options, but then it would never hedge if there was a position that already had significant losses and like 20% or whatever, because that contract would be so far out of the money that there'd be no delta to hedge. So right now I'm giving it a little bit of extra delta just by pushing it out to 30 to 60 days. And so far that seems to be working. At least in terms of like, the whole goal of the system is never to fire. Like if I had perfect timing, the delta hedge program would just run indefinitely and do nothing, because it would mean that I always bought at the perfect time and the only thing delta hedge does is sell. Well, that's not exactly true. It hedges. The only thing delta hedge does is it maintains your delta balance, and it doesn't actually care if that delta balance is in puts or calls. It just wants it to be the same. And so a long call is just as good as a short put, and a short call is just as good as a long put to delta hedge. Delta hedge doesn't care. It just wants to keep the balance the same. And so at the previous day's close, it goes through every stock, abstracts them as virtual contracts, blends that with the actual contracts, creates an aggregate score per expiry period. I could just as easily do it like contract by contract, but I kind of like grouping it all together because that makes it so I can do like better buys and sells, I think, on that specific expiry period. Then, yeah, like I said, if at any point during market hours, the delta of that position, meaning like the aggregated delta of the expiry period of that stock, drops by more than, I think right now I have it like 5%, but that's variable. It goes and it looks at the option chain for a good contract to sell to offset that delta. And once it finds that, it then doubles up, and it might even triple up. It depends on how well it works. I gotta test it. I have not been able to test it much. And so, yeah, like I said, it goes and it finds a good contract to sell. And by good contract, I just mean like it's going to be offsetting the delta gap. So this right here, call gap. This is like an old version of the program, so it's not like this anymore, but it still works. This program works. But you can see here, we do have a call gap. That's pretty significant delta right there. This is something I'd want to hedge on. And so what it will do is it will look for a contract that it can sell that, and it'll like do some pre-flight or whatever to figure this stuff out. I don't have it working perfectly yet. But it'll find a contract to sell that will offset this delta. So it will sell to open for a credit 0.14 of negative delta. Then it takes the premium of that, in this case, $10 for this one. I mean, I don't like this. The new system doesn't do this. It doesn't sell these garbage contracts. Like this is a bad sell. It's a bad sell because you're creating a little bomb here. Like it's better to sell one contract closer to the money than 4 contracts further out of the money. Now, just depends on which way the market's going, because if the market's going down, this actually is a better contract to sell because it's going to lose value faster. But it's also, if the market rebounds, this thing turns into a little bit of a nuke. And so like, you don't want to sprinkle your portfolio with like a bunch of little call bombs. Of course, on the other side of this, I want to have a program running that looks for the right calls to buy back, but that's much further down the road. Right now, I just need to hedge. Don't need to worry about buying back any calls. Just need to hedge. And so that's how Delta Hedge works. And it's pretty freaking cool. And like, yeah. So now what I want to do, like I said, is start creating all these other indicators and signals. Are we still getting trades data? Let's see. I think so. Let's see what our trade flow is looking like. And then combine all of these into one system. SPXW is still bull. So you can see this is like much lower trade volume coming in. In fact, we can probably just look at the trade volume and it'll be a lot less. Trades. Where is it? Oh, I guess I gotta write it. So let's see what this actually is as it comes in. So yeah, I started the stream a little bit late today. In a perfect world, I would have done this like a couple of hours ago so we could still have the live trade data coming in. Okay, we got something. But that's so funny. Why is this trade coming in? Let me see if I can find that here. SPXW. SPXW trade. What is the difference between SPX and SPXW? SPX options are AM settled options that expire monthly on the Friday. SPXW options are weekly and daily options that expire after market close. So that must be why we're seeing so much on SPXW. How does it work? SPXW is a numerical value that represents the level of the S&P 500 index. It's calculated using a weighted average of the stock prices of the S&P 500 by market cap and interesting symbol root SPX SPXW. Oh, you can't see what I'm doing? Well, it's fine. You don't have to see it. What is this guy? XSP. iShares Core. So I kind of want to say filter out SPXW, but whatever, it's fine. I don't like this. Why are we still seeing connected? We shouldn't see that. Connected on open. Why would we be reopening the connection? This connect. I don't believe we should be reopening the connection. I'll have to look into why that's happening. It may be that was always happening and I just couldn't see it because the trade volume was happening so fast. Kind of want to just say this.connect, like let's say console.log connect to Polygon. And let's see if that is actually calling that connect code again. Huh. Yeah, I wish I could have something a little bit cooler than SPXW coming in. Wait, did we get 2 connected to polygons? Or just 1? I think that's just 1, right? Let's just do a quick find. Oh, we got 2? So we are reconnecting. That's not good. Unless that was a previous console. Let's just look one more time. So now we have a clean connected. Connect to polygon. Okay, so it is getting reconnected. What is calling this .connect? What could be calling that? Maybe I have that on another thing. Find all references. Where is it? Set timeout. Where do we set timeout? On disconnect set. On disconnect. Yeah, I don't think I want to do this. I think that's actually the problem right there. But then why would it disconnect? So that means it's reconnecting. That doesn't make any sense. Let's say on disconnect console.log WebSocket offline. Oh, we never looked at what GDT's function gave us. Nice. So what does it give us? Trades, Apple, ticklers, boom. Yeah, I think this is like kind of more of what we want. So let's just copy and say update sentiment and use his code right here and try it again. Update sentiment. Tradeflow.trades. What is it expecting? Tradeflow.trades. Sentiment by symbol. Oh. Let's say sentiment.symbol should be this. We'll throw it on the class as well. Just because it'll be easy enough. All right. And then we can pass that here. Tradeflow.sentiment. Nope. .sentiment. All right, let's see what that gives us. Give us joy. Okay, connected to polygon, connected, undefined, undefined. Well, it should be undefined until we get a trade. And let's bring our trades are already in WebSocket offline. So what is that about? What is that about? Well, it can't be offline if we're still connected. I mean, it's not working. It's not. We're not getting any trades. But actually, we're just not getting any trades. There's just no trades happening, right? Because we are logging them. Console.log trade, yeah. So there's no trade, so maybe that's it for this session. Like, I started a little bit late, but damn, we were so close. How can we do this? We can simulate it by taking a bunch of the data and, oh great, I just crashed my browser. Oh, that's funny. Well, then I can't simulate it if I don't have, if I can't get to that terminal window. I have another terminal window, but I'm beach balling. Unfortunately, I beach balled, so I can't replay this time. Oh wait, maybe I can. So let's say, nice, I think I can. Let's get rid of all of this and have it be like that. Change language, JSON, boom, boom. Is that gonna, like, is this gonna work? Seems like it'd be rough to make this work. So like, assess GDT. This might be like too big. Let's see. That's how big it is. Okay, that's a lot of data. Let's see if we can fix it ourselves. So let's say select all occurrences. We'll go like this and then like that. Does that make it valid? Const trades equals, yeah. Well, that would be for sure the case. Let's say, let's remove these conditions for now and just have it be null because I don't really care about the trade conditions at the moment. I just want to see if we could do a replay. I kind of want to be able to do a replay anyway because I have not been able to make much progress on this tool since I can only work on it really during market hours. But if I had a replay, I'd be able to work on it more. So let's say let trade equal that. No. Like this is something AI could do so fast. Auth success. Find success. I feel like if we just like find all the little bugs here, we can fix it pretty quick. Maximum number of connections exceeded. I think that's because it kept reconnecting, is what I think that was about. All right, let's do a quick scan of the document and see if the chances of this working are like slimmed in on, but we can look at the map here and see if it all looks good. It kind of does. It'd be hilarious if it did work actually. So do we have boom, boom. All right, last try. Hey, no way. Oh, that's awesome. So we'll say json.stringify test. Cool. Well, that's cool. So now we can do a quick replay and then we can keep on developing. Const replay data equals this. And we'll just delete that and wrap it so we can see what we're doing with that. Right? Yeah. So then let's say something like, how do we want to do this? Console.log replay data.length. Console. Okay, let's just see what that gives us. It seems to be working. Undefined is not right. What does that mean? Sentiment cannot be undefined. Update sentiment. Return sentiment by symbol. Hey, we got some trades. Okay, so it's still working. Damn, I shouldn't have closed it. Hey, nice. Okay, so it's working. Cool. So we still got trades coming in. Sentiment label bull. Let's ask GDT what that means. Like, if we see a bull sentiment on SPXW, was it? What does that even mean? What does it mean? Tell us what it means. Are leaning more towards expecting an increase in the S&P 500 index. So you'd want to buy calls on the S&P if you think volatility is going to go down. Because I've learned from our friends at Cheddarflow that they're inversely correlated, and I believe what they say. So yeah, like I believe that is a bullish indicator. I don't know. I've never heard of SPY until today. Okay, so we did go to bear. This is good. So we're seeing some variance. So sentiment label, sentiment. So first of all, you're not even filling out sentiment. Back to the sentiment score. 0 to 1. This should maybe just be the put to call ratio, unless you have a better idea. So while he's working on that, let's see, when did we switch from bull to bear? Okay, so we're at bull on SPXW, and we get this what? A put, so a bear. So that is betting on volatility to rise and S&P to fall. And let's try to look through the logic of this. So our sentiment, I guess he does have something there. Call volume is 20, put volume is 18. We get a put order, so now put volume should be 19, and it is. Perfect. And the put premium increased by 89 to 92. Perfect. So that is working. And let's just verify call as well. So call volume is not showing us that yet. SPXW, where are you? All right, well, is it still at 20? No. We can check here then. So we're at 22, looking for change there. So 21, 22. So this went to 22 after we had this order come in, and it was for $810, one quantity, and it was a call, and it incremented this by 1. So it is working. And the call premium went up to $80, or no, it would have been 64. Yeah, boom, 64. Okay, so I'm feeling pretty good that this is actually accurate, and put to call ratio is almost 1 to 1. Now, how do we want to think of the put to call ratio? A higher index means bearish. Above 1 is bearish, below 1 is bullish, right? If the put to call ratio is above 1, then that's definitely bearish. So yeah, I think this is all correct. 22, 21. But actually this is bullish on SPXW because it's below 1. So as long as, okay, so now actually we saw a big jump. Let's see what made that happen. 175, 133. Okay, right up around here. I don't actually know the direction of SPX, but I'm just looking to make sure that all of this stuff is logical. It was this order. So 10, that can't be right. Call volume, put volume. See, we really need the put to call ratio to be scaled by both volume and size, or we could just call size price times quantity. But volume, I don't even quite, there's so much you can do, right? Like as far as sentiment goes, what if you get 20 puts within 500 milliseconds of each other? Well, that's a totally different signal than 20 puts 2 minutes apart each. And all of that can go into this sentiment score, which is not correct. So did I give him feedback yet? Puts to calls. I calculated puts to calls, puts divided by put plus call. That looks right to me. Yeah, no, that looks right to me. the sentiment. Between 0 and 1. I mean, that actually should create a sentiment between 0 and 1, I thought. 1 minus the percentage. Yeah. Normally sentiment. Let's see. Maybe it's not actually that way in the code. Okay, so he did update that code and we didn't update it ourselves. Let's go back and put in his new work. Thanks for working for us, GDT. GDT. Okay, and then what I want to do is replay these also. So let's say function replay like cycle. Let playback equal replay data. So this will be our like source, and then what we can say is like const trade equals playback. Well, dot shift. So we'll pop one of those, or we'll like get one of those off of the playback, and then we'll say we'll do like trade flow dot on message. How can I get a raw data? Like, how can I convert a JSON object to a raw data buffer? Because I want it to be exactly as it comes in from the WebSocket, which is as a buffer. To convert that, you can first stringify it and then convert it to buffer from. So let's try trade buffer dot from JSON dot stringify trade. Oh, nice. Okay, so let's just await it for fun. Nope, we won't. I mean, but don't we want to? Because this is like doing some work. I think we want to. Okay, so we're gonna pop, or we're gonna get an item from the array, and then we're gonna pass it into our message, and then let's say, and then we'll just keep doing that until we run out, and we'll say like it, because we want this to be in a continuous loop forever. So we'll say if playback.length equals 0, then playback, I think we could just say this, right? If we don't have the length, then we can call it replay. And that should make it run forever, infinitely. And so we just got to make it recur and call it. So then we would say set timeout, boom, replay, milliseconds. Let's have it do it every like second for now. So once a second, it's going to replay the trade data that was coming in during market hours. That should give us a little bit. I mean, if this works on the first try, that'd be epic, right? But we actually do have some pretty good data here. SPXW is the only contract being traded. That's so funny. And a super bearish volume. But again, I don't know that that put to call ratio is like super accurate. I almost wonder if it should be normalized by premium. I don't know. I don't know. Messages.map trades. Oh yeah. So let's always say this is an array. Nothing. Connected to Polygon. So it must not actually be set timeout replay. Console.log replay. Should be calling like once a second, right? So that set timeout's not working. Set timeout replay. I mean, do I got to do that? No. What? Is that right? Seems like a very elementary mistake. I guess that was it. Well, yeah, that makes sense because it's going to execute this. Yeah, so this is the arrow function that executes that. Anyway, coding's fun. So undefined, why is it undefined? So now we should see, interesting, that it would be update sentiment, trades, trade flow. I'm just curious what would happen if we put this lower. This is like total guessing, but I don't know why that's not updating. It should be updating. That doesn't really make any sense. So update sentiment, trade flow, console.log, update sentiment. Oh, I think that's because we replaced it with his code and we don't ever return sentiment by symbol. That's the problem. He wrote the wrong code, not me. It was him. JDT. Nice, nice. Okay. So now we can speed this up. Let's just say, go ahead and say like 25 milliseconds, which I think is like kind of closer to reality. Boom, 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 boom. Nice. Okay, now let's really just go as fast as we can. Because we are awaiting on that. I mean, why are we even awaiting, right? Let's just not await. Let's just send the shiz out there into the world. You're free, you're free. Okay, I think that's like happening pretty frequently. Like, let's see. Replay. Where's my replay? Page up. Well, it's definitely being called because I could see it right there. SPY. Okay, now I do feel like it's not actually being called. So maybe there was something to that await. And this not being 1 second. Oh, they're both 1 second. Let's just say 25. Let's just say 1. So this should just basically, the second it actually sends it to the server, it should do another one. Nice. Reading null of EV. Let's just pop that to the top maybe. See if that fixes it. No. Do I have any message that is not like, how would I even find that out? Well, let's just account for that in if not EV, because maybe there's just like one of those that is like off or whatever. .ev. We'll say if not message EV return, or not, or message.ev does not equal a trade. Now we should be working. Boom. Cool. Okay, cool. So this is it. This is working. So now I still don't know why we're not seeing the actual trade come in though. Put the call ratio, replay. Maybe just because it is, let's put this to 100 milliseconds, set interval. Oh, you want to know why? That's funny. Okay. It's because interval, where's my interval? Where's my enum? Oh, I changed it to milliseconds because of the conflict. Let's just say this second 3. So this will be, the replay happens every 100 milliseconds now, and the summary happens every 3 seconds. All right, this is what I was expecting. Nice. Cool. Okay, nice. Nice. So now we're replaying this is the real trades that happened a few minutes ago. I just happened to be able to copy and paste them from my terminal. So now we got a cool replay going, and we could even look at the exact time it happened. And as that's coming in, then we're summing up that every 3 seconds. And that's pretty good. So now, like, let's give GDT this object and ask him to do some work on it. Can you take this object and write me a function that returns the following? Top 10 bull flow, top 10 bear flow, top 10 most active. Oops, don't get confused, because he'll try it even if he doesn't know what he's fucking doing. And then I think that's actually pretty good. That's all we want. Do the work. I'll be back. So let's just get rid of the trade message now, and then we can focus on the summary, on the sentiment. So now we have coming in. Oh my God, you guys have not seen that in forever. That's so funny. You haven't seen what I've been working on? That sucks. But I guess you see it when I pop over to here, right? Okay, at least that's working. So like bull, bear, QQQ, bear, IWM, bear, SPX, bull, SPY, bear. Interesting. VIX, bull. So this is scary. This is scary. I mean, not that scary, but like it's this is like very much bearish activity, which makes sense given what the Fed said. Thanks for that, Mr. Powell. Really appreciate that. Really do appreciate it. Okay, so where are we at? We got the sentiment coming in, getting analyzed every 3 seconds. And GDT should be done writing that code now. So let's go ahead and pop in get top 10. Nice. I like how he does it. I like how he does it. So get top 10 sentiment. Sentiment by symbol, I believe. Boom. So what is he doing? So he's sorting it. So he's taking all the symbols and he's sorting them by sentiment minus sentiments. Could it be that easy? Could it be that easy? So instead of looking at this, we'll say console.log get top 10 const sentiment equals. Let's just see if he did some good work for us. Nice. Hey, cool. So it's getting populated. So he's just giving us the symbols, I see. Top 10 bull flow. Well, there's just not a lot of symbols in that list, I guess. Unfortunately, we can't do like a great test of it. But the bull is VIX, the bear is IWM. That kind of makes sense. I kind of want it to be returned, though, as this sentiment. Like, boom. Can you update? Well, I guess I could just grab that, right? Like, maybe that's actually why he did it that way. That's kind of actually better. So I want to see the actual values for these. So we can say dot map symbol, and then we'll say sentiment trade flow dot sentiment symbol. I believe this should be give me what I want. Give it to me. Give it to me, please, for free. Don't make me work for it. Thank you for giving it to me. cool. But now we don't actually see what symbol it is. So we still want to say like this symbol. No, I just confused myself. What do we want to do? Sorted. Oh, it would be like this. Object. Right? Well, let's just do this. Actually, this will be easier. We'll just say return this spread with the symbol as well. So that's a little bit easier. The whole thing with programming is not to think too hard. You just don't want to have to think too hard. It's already hard. Like, you know, that's why AI is so awesome. Now that's looking a lot better. So let's get some numbers tied to this. I actually want to say the opposite of this, and let's do a little formatting right here. So we'll overwrite the put to call ratio with trade flow dot sentiment symbol dot put to call ratio, and we'll say round to precision 4 should be plenty. See if that gave it to us. And then we can just like make the rest of the stuff look nice. So what is this? Dot put premium will be $2 put premium. Oops. Put premium. Right. And we could do the same thing with call. Call. Let's see if we're looking any more readable. Nice. Now that premium isn't right. There's no way that's right. That can't be right. That must be contract price. So we actually want to go back to wherever he's recording this and say total normalized calls premium.calls. Oh, it's actually me. So I should be doing it. So when I add the premiums in my trade total, I need to also multiply by 100. That's how options work. I don't want to explain it to you. If you know, you know. Okay, that's more accurate. Okay, so we got 33 grand. Like those numbers look a little more accurate. So put to call ratio is 1. Put volume, like I guess it would be 1, right? Because that's like 100% puts. So, but it couldn't be like above 1 in this scenario. No, it could. I'm thinking of sentiment. And then are we actually getting through all these trades? Like how fast is this loop running? Set interval, replay. We should be able to. Just bump it up to 25 to make sure we're getting through them all. So connected. So now every 3 seconds we're getting a summary of the trades as they come in. This would be a lot cooler if we had live trade data, but at least we can replay it, which is kind of fun to do, even, or that itself is kind of fun. Okay, let's look at it. Top most active, SPX. Now, why does he say this is the most active? Volume? Well, there you go. Put volume, call volume. Yeah, it looks like the most active. 262. Yep. Okay, that works. Sentiment. So what would the sentiment be? I guess it would be scaled to, if it's bull, it's like 98 bull, right? Which is actually the case. Like they're claiming 10 million of premium into SPX. I mean, that would not be surprising even a little bit, right? think that would actually make more sense than the numbers we were seeing. Okay, so yeah, so the most active has the most premium and the most volume. Everything is aligning, and they're saying it's almost 100% bull, but that's because the call volume is so high. And oh, this is only going to keep going up forever though, right? Like this is, I mean, I shouldn't be confusing this for real data because it's just looping back on itself. So, but still, like the logic is working. So bear flow would be call volume 0, put volume 88. Nice. Nice. But it's not sorted. Call premium, put premium. Like top 10 bear flow, put volume. So he's, nah, because even look at this. Is there a sort happening here? Like top 10 bear flow looks unsorted. I see he's sorting it. So top 10 bull flow, boom, boom, boom. Well, it's definitely not perfect, but you're correct. I apologize. My initial code sorted through the keys, but didn't actually organize the bear flow in a sorted manner. Okay, let's see. Oh, he's using my map. Key sentiments. So I just want to take his version and then paste that in and see what it does. So he's saying sentiments, key sentiment. But the sorting logic doesn't look like it changed all that much. Oh, so he's sorting by sentiment, like AB. I don't know. I almost feel like we want to sort by like volume. No. The sorting logic is kind of confusing me. So that's what he's using. Top 10. Okay. Okay. So it's the sentiment score. I see. Like, should we sort by, let's sort by premium, not score. Yeah, because we don't even trust the score yet. Oh, it could indeed provide a more weighted sentiment. Oh, thanks. Thanks. Very validating. Okay, so it is called premium input premium. Yeah, that makes more sense. Excellent. I think this is going to give us a better result. I think it will give us a better result. So now we wait for the data. So top 10 most active is not right. That is not right. Huh. Top 10 bear flow. That's right. Yeah, okay. Bear flow's right. Bull flow. Bull flow's right. No bull flow. Okay, this is actually giving us good information. Nice, nice. This is good. Okay. Now, why isn't most active working? Oh, wait, maybe it is working. I think it is working. So that's 170, that's 68, 8888. Okay, it's working. Cool. Cool. So yeah, I think that's pretty good for the day. We could wrap up from here, and yeah, like I will be excited to plug all this logic into the markets tomorrow and see kind of like what the trade data looks like. But I think we got our goal in place here, which was we connected and we're getting a live socket connection, kind of a gimme since I've done it a million times on this Polygon API. So I'm like familiar with how they auth and stuff, which is like always the hardest part. We are now aggregating the trades by the company, also a gimme since GDT wrote the code for us. And we're doing a live sentiment score, which is also written by our friend Gamma Delta Theta. So I'm going to work on cleaning up this code, and maybe next time we can visualize it in a dashboard. The way that I see it, in my mind at least, is you have 5 vertical columns, full screen, full height, full width, equal width. Column 1 is a minute, column 2 is 5, 3 is 30, maybe 15. 4 is an hour, so let's call 3:30, and then 5 will be the session. And within each of those buckets or tranches or columns, we will categorize trades. And so as the trades are coming in, they'll start in the 1 minute bucket. Actually, they'll be equally distributed to all the buckets at once, but then they'll expire and be removed from each bucket. Yeah, that's how it'll work. So like after 1 minute has passed, then we remove the trade from that tranche. 5 minute, 15 or 30, probably 30, maybe 15 hour session. And then, so now we have all of our trades coming in through a socket connection. We're sizing them and getting them looking all pretty with this interface here. We have our sentiment score calculated. We have all that stuff. So what we do then is we start visualizing it. And the way I think it would be cool is if like it was a bunch of boxes falling from the top and then like kind of tumbling over each other or whatever. And basically the size of the box is set by the total volume, or maybe the total premium, even better. So the size of the box is set by the premium, the shade of the box is set by the sentiment, and then we just put the symbol in the middle. And then here's what you would see then. Every day you would see this, like SPX, QQQ, Tesla, Apple, NVIDIA, whatever people are trading that day. You would see all of the buckets filling up at once. And then they'd all be getting, like, they'd all be the same size at the beginning of the session, but within a minute, or really within 15 minutes, really within an hour, we'll see all sorts of different stuff in there, because as the trades expire from their buckets, it's going to change the visualization. And so like, I mean, I'm probably not going to do that like tumbling down animation until like, you know, things are really solid or whatever. Right now I'm just like kind of trying to get this working. And so I think that'll be pretty cool. And so we'll see, maybe from the bottom up then, we'll see like this rising of like all of the most active tickers on all tranches. And then as they expire, like if we look to the right, we're going to see what's most traded for the day. If we look to the left, we're going to see what's being traded now. And the reason that's important, they have to expire, is because imagine if I just had this dashboard open and there was just like, I was only looking at the aggregate day level. That's going to hide a ton of valuable information. Like what if I just see waves of Apple puts coming at the 1 minute, where like the sentiment at the 1 minute level on Apple is just like blood red and it's a huge box. But then like it's still like green and whatever on the day. That is what I expect to happen, but we won't know really until we give it a shot. Pretty sure that's exactly how it's going to work out. And it'll be cool though. And now we have a pretty good foundation here. Where's my code? Of stuff to be able to work from. So we're authing, we're subscribing to all the trades. Each time we get a trade, what are we doing with this? I guess we don't need that. Messages.map. Because we're updating the thing. And then, yeah, we don't need that even, or that. So this is like so easy. This is kind of like shockingly easy. I mean, not really, right? Just to get this version is easy, but to like actually get the sentiment score right, I think is going to be hard. I know there's a velocity element. I know I need a velocity element and an interval. Like there's velocity over time, and that time can be a minute, 5 minutes, 30 minutes I'm kind of converging on. I'm back to 15. A minute, 5 minutes, 15 minutes, an hour in the session is kind of what I'm thinking. But I'll make it pretty easy to configure so we can try different views out and see what makes the most sense. And just for his current sentiment, closer to 1, more bullish, closer to 0, more bearish. See, that's not actually what I want. So he's going to have to rework that next time. What I want is it to approach 100 on either one. So if the label is bull and the sentiment is like, and it's very, very bullish, then it should be 1. Same for bear, same for bear. So they should both approach 1. Okay, well, yeah, I think that's about it. It's pretty cool that, like, even one of my favorite things about coding with AI, didn't really happen today, but like this sort logic, I've done this a million times and it's annoying to like remember. Is it like A, B, and like it's not intuitive. It's not intuitive. And AI does that stuff for free every time. And then what it makes it is, 1, you learn because it's coding in a way that maybe you wouldn't, but 2, you're just getting the results constantly. So you're never getting blocked. So like how much progress you can make is how many hours you have in a day, versus in all of my life previous to AI with coding is sometimes I would get blocked for months, for years, and I'd forget about the project and just give up on it because the blocking is so hard to deal with. I mean, like the difference between getting unblocked and blocked is night and day. You know, like nobody wants to be hitting yellow and red lights. You want to hit green lights. And that's what AI helps you do. Hit green lights in whatever you're doing all day long. So I hope that was useful for you guys to see some of how I work with AI and some of its capabilities. Next time we'll keep going on this Delta Hedge program and the sentiment and the live sentiment analysis. And I want to plug all of that into this trading tool I'm building, which maybe I'll sell one day, which would be pretty cool. And like I said, that's going to help do a bunch of stuff, including just like loss prevention and, like I shouldn't be able to place an order that's going to create a loss, that kind of stuff, easily. And all sorts of other ideas, basically, because as a trader, I've discovered that my behavior is not that great. I really have an instinct to buy when I should sell and vice versa. And so I don't really want to have to think about all that stuff, but I still want to have fun and participate in markets in a way that I want to. Like, I don't want to have to own ExxonMobil. I understand that it's a defensive stock. I understand that it's like inversely correlated to the companies that I care about. I don't want to have to hold it. Like, I don't want to have to think about it. I don't want to have to know it exists. I just want to keep buying Tesla all day long. And if I do a bad buy and I buy at a time I shouldn't because the sentiment says not to, or the technicals are wrong, then the system should just warn me and say, hey, probably don't place this order. Like this isn't the right time. And then if I override it and place the order anyway, and the trade goes not my way, then the program should do its best to prevent those losses as best it can. And that's where delta hedging comes in. So we attack the problem of returns. Well, we attack the problem of being able to play the markets like a game and not taking it too seriously by coding up a bunch of widgets that work for us. Because if you wanted to delta hedge, you'd have to hire somebody. Wow, something's coming in here. Lots of dark pool activity. I should show you guys. Something's happening. 529. Yes, right now, live. Lots of dark pool prints. You can't see it, and I'm not going to show you because it takes time. But we don't know if they're buys or sells. Let's just look at the dark pools real quick and see what's going on. I do like seeing the dark pool. Okay, 432.12, 2 billion. I'll just show you. Why not? Let's just show you the dark pools because it's cool. So dark pools is like money being traded off the regular market by like Saudi Arabian princes and freaking the ghost of Winston Churchill is who I like to believe is the only two participants, and they just swap back and forth. They just buy and sell from each other. I don't know. I don't know who's doing these dark pools, but that's what I like to think. And so this is a lot. 2.1 billion from the sources that I have, that's a lot. And from the numbers I've seen, that's also a lot. And if you looked at Friday's session, it was a lot also of premium coming in. 4.7 billion. So that means 2 sessions in a row, we've had the dark pools making basically record prints. Not really, but like 2 to 3 times more than normal. So like call it a lot. And what are they buying? They're buying at 430.38. Well, that's kind of interesting, because if you were going to put $4.7 billion into the market, would you do that after we've just had this like massive decline? I mean, some stocks are down 20 to 30% in 2 weeks, in a week. And so like, are you really going to go and sell $5 billion after that just happened? You can't see it. There's the number. I don't think so. I think this is a buy. And I think that's how the technical guys infer this. They just kind of like think about it logically, and they look. So like these are coming in, I guess, in order of time. And I think we can trust that they're sorted by time. I think so. Which means like we're pinging at the beginning of the day, just like a couple, like ding, 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 nothing, 4 million here, 6 million here, pennies. And we're pinging all the way down as the market goes down. But then, hey, look at this. We see a little thing around 432.62. Now, this will be interesting. Let's look at today's big buy and see what price it came in. That can't be right. Today. Search. Okay. So we got 2 billion at 432.12. My contact's coming out. Sorry. 432.12. This yesterday, okay, right? Like this is how I'm interpreting it. So we're doing these tiny buys of 4 million a pop as the market declines, just kind of like regular. Then we get to 432, we do a little bit bigger, we get up to like 10, 20 million. Now at 432, below 432, even close to the bottom of 431, we see our first big buy at 1.4 billion. Are you telling me that these dark pools are just pinging, selling, and then they do like their biggest sell at the bottom? That's not how it works. That's not how the smart money does it. That's how I do it. I buy at the top and sell at the bottom. These guys sell at the top and buy at the bottom. And so I think I saw actually the folks at Cheddarflow highlighted maybe a week ago, I feel like it might have been, like something that seemed like a strong sell. And so here, in 1 week ago, we were at 450. Like we're down over 20 bucks on the S&P. That's substantial. And so right at this level, 448.27, which is like the top, we see this $1 billion order. That's not what it was. Let me see if it's, I wonder if I can say from here to here. And then let's look at the full linear history. Okay, so really we're up at like on the 18th. So let's say on the 18th is kind of like where this massive sell-off really gets picking up speed. Not really. It was before that. Let's see. Where are we really at all-time highs? 445. I think we got to go back into August. Okay, there we go. So that's September 20th. So let's go September. So it was basically at the 18th. September 20th. Looks like the local maxima to me. So right here. And what do we see? Ping, 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 ping. 433.6, half a billy. 442, 1.5. 438.5, 3.6. Considering the market is lower than all these numbers, I do have to imagine that those were sells. Because look at this. We see a big premium of 3.6 billion at 438, which is like still like pretty significant from where we are now. I just want to go a little further back. Like, let's just do this and see if we see anything, see what we can see. So we see 2.3 billion. Okay, let's even go a little bit further back and just look. Okay. So we see 1.2 billion at 451 to open on the beginning of September, 9/4. And then as we go down, what was that? 451. We see another big 450, 2.3 billion. And like, these are pretty big. These are showing up 200 million, quarter billion at a pop, a third of a billion, 600 million. I just have to think that these are sells. I have to think that these are sells. And so like, if you're seeing, the cool thing about the dark pool is like the retailers can trade all they want. They're never going to put a dent into what these institutions are, how they move the market. Like, that's how the market moves. And so if we're on our way up, where do you think we're going to hit a ceiling? I agree that it would be around 448 as measured by the dark pools. The dark pools. Okay, this is a big one. Look at this, 4.5 billion at 446. That's kind of a big one. So that's something. 446 is definitely something. And I think the reason everyone looks at SPY is because everyone looks at SPY. I think it's like a recursive thing. So yeah, 438. I mean, there's just no way, as far as I know, to know if they're buying or selling. But in the last like roughly $8, we haven't seen a big buy or a big order. Okay, so we see a big order of 3.3 billion at 445. Then we see nothing, basically. A couple here and there at 440 or whatever. But the next $1 billion print, the next big billion, comes in at 438. Is that $10 lower? Let's see. Almost, because this is 446, and this is 438. So not quite, but call it $7.50 or whatever. But the volume is the same. So is this a buy or sell? I don't know. But I could imagine this being a sell. I could definitely imagine that previous one being a sell. Now the question is like, look at how long we go without a big print. No big prints until this happened yesterday. So we see a big print at 431.37. No, that wasn't yesterday. That was a couple days ago. And then we see the biggest print we have at 430.38. So are you telling me that the most informed money deploying the most premium into the market is not the most well-informed? No, like whoever is putting the most money in the market knows the most, I believe. Like, who's putting $4.7 billion into the market? And you're telling me that order was a sell order after the market had just tanked? I doubt it. I don't know how to know, but I also know that, look, there's not much actually happening since then. Is this on? Yeah. So that was the last big print, was last night, yesterday. So no big prints today, right? What is this? How do I go back? Search. I don't know where that number went, but anyway, that's kind of how I interpret it. And I guess this was probably today. Let's see if we could reset this to 9/29. Oh wait, that's why. It's because it's like we're on 25. This is Monday. I'm living in the future. Look at that. So first of all, look, the market is already above their purchase price. So they bought at 430 and 432, 2.3 billion. So it's another 4 billion. And this is 1 cent above the previous day. So 430, 39. I think that's how the pros do it. I think they look at this shit and they like draw charts and lines on their graphs, and then they remember when we're at 430, that's where you make your buy. And you don't go even all in, but that's where you start to accumulate. And you don't do it at 438, you do it at 439. Why? Because that's when this guy came in. And I don't know, like the more that I get into this stuff, the more I really do see it kind of as a game. And it's really fun. I wish I was better at playing it, but I think all these tools I'm building will help me be better. And so we'll keep going on it and see what we can build and what we can do to, like make it so that the whole goal, everything I'm trying to do on this current obsession, which is I want to make money when the market declines automatically. I don't want to have to buy a put. I hate buying puts. I want to build a put that puts itself. That's how I work. That's how I do things. And so that's why I need all this data. Like I have to know the delta and theta and gamma of every contract every second of every day, and then all of the shares also abstracted. And now I have one interface by which to hedge my entire portfolio. And I may end up doing things like nominally or whatever, like maybe I'll hedge like 5% of the equity value or something. But I know that using delta to hedge versus price is going to be the thing that unlocks it. So I'm not there yet, but like the idea is I one day want to be able to push a button that deploys like the riskiest contract on the market. And then I just want to walk away from my computer and know that I won't lose everything. That even if I lose the majority, like 80%, like this system will automatically ensure that it can never be a total loss, because in this case, we're looking at a trade delta, and I have my own ideas of how to do that separate from the other hedging program. There'll be a portfolio hedge and a trade hedge, and the trade hedge will be much more active, live trade socket data like you saw. Basically, the trade would require that you're basically only trading like the highest volume, 10,000 volume plus contracts, and because it would be calculating its own price based off of the bid-ask spread of the live trades, and you would need a lot of volume to get an accurate signal. So yeah, like let's say I get all this delta hedge stuff totally reliable. It's already working pretty good. It's pretty good. It could have been way better. Maybe if I'd smoked a little less weed, it would have been a lot better. But it is what it is, and it's not terrible as it is today. And so so the idea with the put that puts itself is it works at the portfolio level, but also at the trade level. And like I said, I want to be able to do what these guys do. Like, let's look at my favorite guy, Tesla. Actually, I've been into Apple these days. What's Apple doing? Okay. So these guys bought this week's expiring contract into the close for $1.25. Now, let me just tell you, and they put 50 grand into close. Let me just tell you, this 50 grand tomorrow morning, since it was into close, is going to gap up or down by basically half. Let's call it a quarter just to be safe. So why is math hard? 12 grand, 12 and a half grand. So yeah, like this trade is going to be up 62 or down 38 tomorrow morning. Like that's crazy. That's crazy shit. Like, but they're doing it because that gap up and that gap down in options is everything. And I have been on the right trend of a gap up, and it is glorious. It is glorious. And I desire to feel that once again. And so the cool thing though is you can feel it for free all the time if you just get the sentiment right, because you can gap in puts just as equal as calls, right? But I'm a call guy. I refuse to buy puts. That's why I'm building this program. And what I hope it allows me to do is deploy basically infinity risk into the market. And all it does is hedge those bets every 100 milliseconds, ideally 10 milliseconds, right? And how does it hedge those bets? If it goes against me, all it does is it sells a little bit of equity to cover that gap. If it goes even lower, it sells more. If it goes lower, it sells more. But it's always bringing the delta balance it's freaking so good. It's so, I want to say the word genius, but it wasn't my idea. It was delta gamma thetas, and I guess other people do it too. But the reason it's such a good idea is because if your long delta falls by 5%, and then you sell inverse equity, like because that inverse equity is negative compared to your long, you can bring that balance right up. And so like, here's why that's important. There's two ways delta hedge never fires. If the market goes up, doesn't do shit. If the price is going up and down in a day, it doesn't do shit. It waits for the delta to move. And so there's two ways it doesn't fire. One is if the market goes up. Two is if I have a delta 99 contract. There's no way for the delta to drop after it gets to 99. You can just buy it at 99. And let me tell you, if you have a delta 99 contract that goes out of 99, you're FUD. And like, you better have a hedge program active. And so that's what I'm excited to build with you guys live on the air. See if I can actually do it. Like, be pretty cool if I could do it. And it would be like, can I build a weapon, or I guess a tool, a game item, a unique item in the game we're all playing called a put that puts itself. And the idea of that in-game item is it allows me to take unlimited risk and to manage it effectively. And so cool thing about that is the market actually does pay you to manage risk. So if you can manage infinity risk, you can get paid infinity dollars. I'm not saying this, it has not been easy, and I keep like, not really proving the idea, but the further I go down the road, the more evidence I have that not only is this possible, it's just scratching the surface of what's possible. Like, I can theta get hedge, I can gamma hedge, I can, like I said, create tools for loss prevention, and basically I want to make it very safe for anyone, even if they don't know a ton about like the markets, to be their own hedge fund. And then I want to sell that as a company, and you can buy it too. You can invest today, $69.99 a share. Send me an email, and you're going to have to find it, or just leave a comment on this video, and you can buy access to the put that puts itself. Assuming I get it working, we'll all discover it live together on this show. If not, it was fun trying, but I'm pretty sure I'm going to get it working. All right. That's all I got for you guys. We'll